I am Ethan of the DC Day Swing Traders, and we welcome you today. We have 1,926 members nationwide. We have a YouTube channel called DC Day Swing Traders. All our trainings are free, and we have many professionals who present professional slides in their presentations, and they literally give away their entire methodology for free. So we hope you will visit our website, and it's very important that you click the subscribe button. If we get 1,000 people who subscribe, we monetize the site, and there's nothing happens with YouTube when you subscribe to our channel. Absolutely nothing happens. You just up the counter one. So without further ado, I'm going to present Rob Shapiro, our co-director and co-host, and he's going to give his monthly evaluation of the S&P, which for the last 9 months has been almost 100% accurate, and it's pretty amazing. No pressure here, but we take it away, Rob.
It's just chart reading, which is what I do. So fortunately, I have something to say again this month. I don't always have something to say, which is why I didn't used to do it every month. But last month I had something to say, and in fact, if you followed it last month, well, let me get the screen share going. Let's see. All right, this should get a portion of my screen going.
Oh yeah.
All right. So let me just hide. I'm going to make my SPY daily bigger. All right. So there's a daily chart of the S&P, which is my it's my guide for trading. I look at it along with the QQQ every morning, and after I scan for gaps, I basically do this analysis every day. If you remember last month, I want to point this out. I think it was the 19th. We just triggered what I call a buy setup, which is a multi-bar pullback to a minor support area at a rising MA, which is exactly where we were last month. And I mean, Ethan had the call of the year. I think I had a pretty good call on the SPY though, which was just buy it. This is a great buy. Just stop it down right under that 20 MA or the prior low. And the next day we got another bottoming tail. Make sure you can. Oh, there's the problem. Yeah, so this was the day we were talking about right there. And then the next day we get this bottoming tail. So there was plenty of time to get in this. And if you did, I gotta move my camera because it covers. Okay. Sorry, it covers up the menu on the Zoom. Sorry, I always struggle with the props.
That was called the Trump trade.
Well, this was November. Yeah, it was just, I mean, the Trump trade, I think, was right here, 11.6.
Yeah, that was there, yeah.
Yeah, so this was the first pullback after
the first
Trump
pullback
trade.
on that, yeah.
Right.
Yeah, I'm sorry, I was watching, I saw the wrong, I pictured that wrong, yeah.
Yeah, so it was a nice trade. I mean, I think, I didn't do this particular trade, but, it was basically an entry at 590 with a stop at 584. And, currently you're at 604. So nice trade if one did that. $14 move with a $6 stop. Anyway, so I'm looking at it again here. And we've got a similar situation. In fact, if I were in that trade last month, I'd still be all in. I mean, I'd be looking at it carefully because we ran up to new highs here that were hit on the 6th, pulled back a couple of days, tried to run to a new high, couldn't quite do it. But we're doing something that is quite common in stocks, is we're basically going sideways. I note this or call this a correction through time. Instead of a pullback, we're getting a basing pattern. But because we're basing at the high and the MA is coming in from below, I'm not saying we're going to break out, but it looks like we're going to break out higher. I mean, expect a possible shakeout where we attempt to push down some. But minor support here is right in the $600 area. And as long as we stay above 600, I would say we're higher. And it's because of this basing pattern into the MA that I say that. Now, at some point, this rally is going to run out of steam. They always do. But markets can often go a lot further than one thinks they're going to go before they're done. And this has been a long bull market, but it's still going. I'd respect it. No shorts here. And you know, as this MA comes in from below, it tends to push price up. So that's what I'd be looking for here. I don't know that I'd take any entries here. Like last month was a great time to make an entry. Back on the 19th and 20th on that pullback. This one's a little harder, but the strange thing about it is, or the hard to believe sometimes thing about it is, this is actually a stronger pattern basing at the high than a pullback to minor support. I mean, if one's stronger than the other, it's the base at the high and the correction through time. So I still like us higher. Now we've got a Fed rate tomorrow, I think, which could throw a monkey wrench in the whole thing, sometimes does. But as long as that doesn't get us on a new move down, I like us higher. So
one other thing is the weaker dollar. The dollar's been a bit weaker lately, and that has helped.
Yeah, could be.
So Rob, let me see if I never thought of this before. You're saying on the blue line, as that is rising, then therefore the support is rising and in a sense keeps pushing the whole thing higher. Is that correct?
Well, yeah, I'm saying that markets correct in a couple of ways. They can pull back, right? We're in trend, by the way. I mean, this is all possible because we're in a really nice uptrend since we started going up early September. This current daily uptrend, and it has been going since this September 9, 10, when we hit a low and began an uptrend. So because we're in an uptrend, the assumption is the trend will continue. Now, it doesn't always, obviously, but when you get a pullback, that's a very nice opportunity to get in on a market that is trending. And that particular pullback last month was really, really nice because it pulled back right to support and to the MA and gave a nice entry signal.
A trend line of the highs on the way up might give you a place where that may finish, you know?
It could. It could.
You know?
I don't generally watch the trend lines, but I know a lot of people
Because
do.
we still have a little room up. If you look at a trend line and imagine it, you still have some room to go up there if it's going to hit a trend line.
Yeah, yeah. Well, it's all-time highs too. So in
Mhm.
theory, it's got nothing above. There's no resistance here because we're at all-time highs. We're building a little bit on the hourly here because we've got a low from the 10th at whatever that is, 602.13, and today we almost tested it at 602.89. But what I'm basically saying to answer Ethan's question is another way for a market to correct is what's called a correction through time. In other words, we sit there while the MAs come up and adjust, which is what's happening now. MA is coming up below. See, up here, now I watch a 20 MA. It doesn't really matter. This is a medium length MA. It could be 20, 30, 40, even 50. I mean, once you get used to one, you'll know what they look like. And some people watch more than one. I just watch one of this ilk. But the base with the MA coming up from below, above support, building new support. This is actually more bullish than the pullback.
Yeah.
Is what I'm saying. So, look out above. We still have power in this market, is what I'm saying. And
Target could be that trend line.
yeah, it could be. Yeah, I mean, you can put all kinds of line. I mean, I can see the trend line without even drawing one. But and and the more time that passes, the higher the trend line would be.
Yeah.
So I still like us higher. I think we're still very bullish. I think hold all longs and enjoy the rally for now. Is that it, Ethan? Does
Well,
that make some sense?
yeah, no, thank you very much. I understand that. Yeah, it's great.
All right.
Does anybody have any questions for Rob? For the whole group? Anyone want to ask?
Just a comment for the newbies, when you're looking at trends, how do you determine a trend? And you always look for higher lows, higher lows, higher lows, and higher highs. So that when you have, because I'm going to mention that in a later presentation. So you have your higher lows determine essentially which way your trend is going. And so that's important to know.
Yeah, I always like to get in trades in the direction of the trend, and a 20 MA can pretty much give you that. But yeah, you're right, Bob. I mean, I particularly like a series of both higher highs and higher lows for an uptrend.
And that's basic. That's basic chart reading.
Yeah.
For all the newbies, for anybody who's coming in and just wondering what's this all about. When you have higher highs and higher lows, you're moving up. And so you consider you're in still a positive way with your stock or whatever, ETF, whatever.
Yeah. The only test of this, you see, was right before the election.
Right.
Where we fell, but notice support held. There's a big line of support there from here, and it held. So and then the election happened, and then we got the gap and the pullback, and we're still going.
I have a question actually, specifically about SPY. So of course, like I'm love what you've mentioned and mentioned about this chart, but I wonder, do you consider options flow and the sentiment of the options flow when considering whether, for example, SPY may or may not be trending, may or may not be going up or down? So for example, SPY right now, the sentiment is, at least from what I found, more bearish based off of the options delta flow, but I'm assuming that that's probably a poor indicator of whether or not SPY would continue upwards or downwards. But I'm curious if you consider that along with the chart read-in, or if that's a poor strategy for gauging whether or not, you know, any stock or the SPY or QQQ is headed in a certain direction.
Well, I think if you find something and it works a substantial amount of time, it's a good indicator. I do have a VIX chart on my array of charts that I watch, and it has been pumping up a little bit the last couple of days. But if I then take it up to a daily chart, what is it on? This is just CBOE volatility.
John, you should probably test this.
VIX.X. Hold on, I'll put it up.
So I have used the options, the delta options flow to try to gauge whether or not it is going up or down. But what I've noticed, at least with SPY, for example, today was a good example, is it started out with a bullish sentiment based on options flow. And then very quickly, you know, that switches. But I try to follow the big money options flow. That's what I've been trying to gauge. And I wonder if that's a poor strategy or if it's a strategy anybody else has used, essentially.
I honestly don't know if it's a good or a bad strategy. I watched this chart, but really on a 5-minute intraday. And if you look at the 5-minute, you notice it's basically broken out, which indicates that the higher this is, the weaker. This is the volatility index. So the higher that goes, the more likely things are going to turn bearish is the general thinking, the way I understand it here. But I'm no expert here. I mean, I can read the chart, but I don't know how the inner workings of the sentiment works here. But I know when it goes up that markets generally fall. But then if we go to the daily, we're basically at demand. We're in a big line of support here. This is the daily VIX. I'm not sure what do you watch when you're determining the volatility there, or
for the options flow, I've been using Market Chameleon because they usually have a good sentiment whether or not there's either, you know, essentially big money flowing in terms of so for example, SPY is bearish and the big money flow in terms of options is bearish. It will show that, you know, in terms of a pie chart, you know, 2/3 of the pie chart is showing that there's more put options than call options. But my question is more so like that doesn't really have any effect on the actual fluctuations in price, does it? That's just people guessing in a sense.
well, I think it's sentiment is what it is.
Right.
And how it's determined, I don't really know.
Right.
Well, it might be up versus down ticks,
Mm.
but what I focus on is, you know, this chart is creeping up on the daily, but we're in a big support area. If we go above 1680 on this VIX chart I'm looking at, we're at 1587 on the close today, then I'd start looking at that. But I personally make all my decisions on the price chart.
Okay, thank you.
So that's how I go about it. And what would the first tick that would get me nervous about up would simply be a break of a prior low and a move under that 20 MA. And then the next thing would be into this, what's that, 600.17. That's this prior high from 1111, which is now minor support in the SPY. So that's what I was saying before. If we drop under 600, I'd start to get concerned about this uptrend. But until that, I wouldn't worry about it personally. But everybody has their thing. That's the great thing about markets, is there really is no one way to do it. So I think you're asking the right questions. Yeah.
Thank you.
The quick way I would look at it, looking from September, mid-September, or the beginning of September, until the high on a zigzag move up till, what is that, October. I would measure the price change from that, and then take the price change from the early November and use an AB equals CD. And that D may be your target for your final move up to come later this month.
So what Bob is saying,
You'll see,
I think,
you'll
is
see
you
how I
take,
use ABCDs in the chart I
you
present.
take from here to here, and you take that line and extend it out
No,
here.
what actually take from here to here. I can't see. I can do it on my mouse, but not yours.
What's the day
Yeah,
you start at? What day do you start?
it's a zigzag. It's a zigzag. It starts in September, beginning of September. There's a big down red bar.
Right there.
And it goes up to that two doubles up here at near the beginning of October. You're looking at price change from those two. And then you take the low that occurs just leading into November, the end of October, and take it up then to your final. These price changes should be equal. And that way you could set your target up here in late December for the high that may get to.
So you've got about a $45 move from 540 to 585.
Yeah,
So another $45 move
right.
would be 6.25.
Yeah.
I wouldn't argue that, but yeah, I wouldn't
You'll
argue
see,
that.
I'm going to show that a great deal on my chart.
Okay, great. Yeah, I'm really simple about it. As long as this uptrend is uptrending, I'm bullish.
Yep.
That's what I'm looking at. How do I erase now? Oh, there it is. There we go. All right. Any other questions? This is really basic, by the way. I mean, this is basic chart reading. It's very effective, though.
Robert, I have a question.
Sure.
What makes the basing pattern in our upper right-hand corner stronger than the pullback before it?
Well, the pullback, we got down days, right? We extended up. I mean, not really that extended, but we started at a low. Well, let me see if I get my thing back here. Oops. Oh. Okay, I'm gonna get good with props. We'll see. So the pullback has negative days, and we had 5 negative days here that landed on an MA and a minor support.
Yes.
The reason this is stronger is because we're holding up. We're actually not pulling back. There were 2 negative days, little ones.
Yes.
But we're holding stronger, and I don't know how to prove that what I'm saying is actually this way, but I learned it years ago, and it's always worked out for me.
My notion is that we're watching buyers and sellers almost evenly take action at the top of the chart, and neither is ruling. The uptrend is still solid. And so I can see it's a powerful pattern because eventually the sellers are going to shake out as the days pass.
Well, right.
And
If selling could bring this down, it would.
yes,
Right. It's been unable to get more than 2 little red bar days.
yes,
And then if we take this to the hourly chart, which I also look at constantly,
yes.
It's clear to see there's a, what's my tool look at? There's a very nice line of support right here, at whatever that is, 603 something. There's also a top up here. So this is a range. And ranges, after they consolidate, tend to move.
In a big fashion. Boom.
Yeah. When they move, I'm not entirely sure, but you can look for signs like lower highs within the base, you know, like a move up to the top and then a lower high would indicate that maybe we're ready to move higher.
Yes.
Sometimes we get that. I mean, sometimes we don't. We can just zoom up, and eventually this uptrend will break. So the thing that I would look out for the most here would be a breakdown and then a lower high. That would say to me that it's time to start looking the other way. But
so if we were to go back then to the beginning of November, we had a break underneath the trend line, and then the market re-energized. But if the next high had been a lower high,
correct.
and then we have another pullback, watch out.
Yeah, because that's a change of trend.
Yes.
No.
I mean, what happens is if we come below this, whatever this level is, we'd have to come way down here. I'd like to. Oh, that's it. I don't want that. I made a check mark. Look at that. So I would count a breakdown under 600, and then like if we came down here and then came back up to a lower high, that would get me on alert that this uptrend is in trouble.
Yes.
And if we came down below here, it would be dead. I mean, then that trend would be over. It wouldn't be able to fix itself anymore without creating a brand new trend. Because this is really support, this, whatever that is, 585, it looks like.
Yeah.
Okay.
One of the interesting things is sometimes the S&P or the Dow will be down 300, and yet the NASDAQ is up 80. And so there is not that much change. And then the next day, NASDAQ will be down and the Dow will be up.
Yes.
So this is the way they're kind of manipulating this S&P. It's very interesting. And you'll see the numbers on the S&P sometimes will go for maybe 3 hours without hardly changing at all, and then suddenly make a move. And so it's hard to imagine these markets are flowing the way they are and the S&P not moving more than 1 or 2 points. And it's just interesting how that's all kind of controlled.
Indeed.
Yeah. Well, and since you mentioned, I mean, the Dow has really pulled back. The Dow, the Dow pulled back to the 20 MA, which is now flat, and tried to go higher, left a topping tail on 1210, and then broke below. So I mean, the Dow is still in a larger uptrend. It hasn't broken support yet, but to me, the Dow is in a little trouble, and that actually might be where some of that volatility is coming from as well. And the IWM is also in the same boat. We actually attempted a pivot yesterday in the Russell 2000, and then today we gapped underneath of it. That's very bearish, right? What we're seeing in the Russell. So I generally don't watch the Dow and the Russell, so I actually don't see this stuff. And on the other side of that, the QQQ is stronger than any of them. That is, that is at new highs. Although we got an inside bar today.
Well,
So-
Robert, where do you spend your time with the SPY and with the QQQ or the
Yeah,
or the NASDAQ?
yeah. I watch the Qs and the SPY, and just about everything I trade is in the SPY or the Qs.
Right. Okay.
I mean, I guess I trade a Dow stock every now and then, but
Yes.
I mean, it's what 30, 35 stocks. So usually what I'm trading, like today I traded Teva. There was a big surprise gap in Teva today.
Okay.
I don't know if that's part of the Dow or not, but to me, this was the only thing that wasn't easy about this is it didn't take off right away. It's a beautiful gap from lows breaking through a consolidation area to new highs, multi-year highs. So, this is what I do during the day. I just looked for a way in this, and I bought it early. After this first pullback, I just started buying on the second 5-minute bar on the way back up, and then held on after this pivot, though, made a very nice buy. And then you just had to sit and wait for it. I think I got there about 12. Yeah, got there. I didn't get there to 115. Yeah, I got out about 130, I guess. This is the 5-minute chart, but the reason I knew it was going to do that was the daily.
Yeah,
This is my little specialty here.
yeah. You could have realized that last evening.
Yeah, I wasn't looking at it last night, though.
So
Watch a TV with my
what brought this to mind as you looked at that chart and decided there was going to be a pretty good jump here?
Yeah.
Well, I don't anticipate the jumps. What I
Yes.
do is I wait for them to happen.
Yes.
You can, and some people can anticipate. I probably could, but I don't. But what I got here, this was to me a very, very high quality gap. I'm getting off the S&P topic now, but this is my forte. What we've got here is a daily chart that's on support, right? It's just sitting there on support.
Right.
And it looks like it might be ready to go lower because notice we had a lower high a couple of weeks ago on an attempt to bounce. The last bounce tried to break out back here and whatever that day is. But then we came back to support. We came up, we came back down, we came up a little higher, and then looks like we're going to pivot and go higher these last few days. But no, we go right back to support.
Yes.
So today, we got up over all of it. We just leave it all behind. We open right there.
Yes, indeed.
This is a very, very bullish gap. And I didn't know the news at first, but it ends up there. And I don't know, there's some other drug company that had some really successful trial or something, but I didn't know any of that.
Yeah, it's for migraines in children. It was the big news, which was causing the big gap up. So
Look at the volume. Look at the volume.
Yeah, no, volume's-
So somebody knew about it ahead of time.
Well, no, not yesterday.
Yeah.
This is today's volume, the 57 million.
Yeah.
I don't think anybody knew about this. This was a
Oh,
shocker.
I see what you're saying, yeah.
Yeah, the volume was today's volume, which is
news
what I
came out
want.
today. Yeah.
Yeah,
Bob, you got in at the open at that bottom,
pretty much.
and then where did you get out at the top, or what did you do?
Yeah, I almost top tipped it. Here's what I did after after we got up to here, like 2070, and we're getting into lunch, I generally like to close these things into 12 o'clock if I have a runner like this. But it was still going at 12 o'clock, so I didn't want to close it. So I did a little technique that I use as a trail stop on something like this, which is a simple 15-minute bar stop. So every time a new bar, 15-minute bar appears, which is what I'm showing now, I just trail the bottom of the bar and let it go as long as it wants. So I got trailed out. You can see it right here on this bar.
Yes.
Under this bar, sorry, not this bar. So I got out at 2072, which was the bottom of this bar right here. Not quite top ticking it, but
Right.
you know, once I'm way up there, I want to lock in, and I pretty much got the whole thing. I was in from 1950 and 1970. I can't remember my exact entries. They're all in my trading room, though. I post everything I do.